which you must control to keep your life on the right track. Good evening, everyone. It gives me immense pleasure to welcome you all to today's seminar. A topic that is not only timely but essential for each one of us, regardless of age, profession, or background. Money touches every aspect of our lives, from the moment we earn our first paycheck to the day we plan our retirements. We are making financial decisions on every step of our way. That's where financial literacy comes in. It's not about being rich, it's about being smart, secure, and self reliant. It's about understanding how to budget, save, invest, avoid debt traps, and make money work for us. The objective of today's seminar is simple yet powerful: to empower you with practical knowledge that will help you handle your professional finance more wisely and confidently. Financial literacy empowers individuals to make their money wisely, make informed decisions, and secure a stable financial future. As noted by RBI, financial literacy is the first step towards financial inclusion, enabling individuals to access and benefit from various financial services. I encourage each of you to actively engage in today's session, ask questions, and share your thoughts. Financial literacy is not just about money, it's about building a secure future. With that, let's begin this enlightening journey together. Now, I would like to call one of our esteemed teachers, Sir Deepak, onto the stage to make you understand the importance of financial literacy for all the streams.
Good evening, everyone. I'm here to speak on a topic that is very important in today's world: financial literacy, and its importance for all streams. Whether you are studying science, arts, commerce, we all earn, spend, and save. Managing money is key to success. Without financial knowledge, even high earner can face financial stress. Today's seminar, it gives us freedom and confidence. It helps us make smart decisions, avoid mistakes. In today's world, whether digital payments and investment are common, it is very important to be financially smart. So my message to all students is simple: start learning about money. Now learn to manage your money before you start earning it. Remember, it's not about how much you earn, it's about how will you manage what you earn. Thank you, and now I would like to hand over the stage Alice to continue the seminar.
Thank you, sir. Now I think you all might have gained interest in our topic. Now let's welcome Hemant to give a brief note on financial literacy.
Good evening to one and all present here. It's a privilege to stand before you all today to speak on the topic that is both timely and tremendously important: financial literacy. Financial literacy isn't just about numbers, it's about understanding how money works and using that knowledge to make informed decisions. It's about budgeting wisely, saving consistently, investing intelligently, and planning for future. Let me ask you a simple question. Do you control your money, or does your money controls you? That's the heart of financial literacy. Knowing how to make effective decisions about your finances so you can live with security, freedom, and peace of mind. Yet, despite its importance, financial literacy is rarely taught in schools. Many of us enter adulthood without understanding basic concepts like credit score, interest rate, or compound interest, and the result: stress, debt, and missed opportunities. But here's the good news: it's never too late to start learning. You don't need to be a mad genius to be financially literate. You just need to be curious, consistent, and proactive. In today's world, it's easy to spend without thinking. With just a few taps or a phone, we can order food, clothes, electronics, anything. Credit cards, buy now, pay later apps, and social media pressure encourage us to spend more than we earn. But here's the truth: the decisions we make with money today shape our opportunities tomorrow. Let me give you an example. Suppose you earn $1,000 a month. Without a plan, that money disappears quickly. Rent, bills, food, and fun. But with a basic budget, you can decide where each dollar goes, and some for essential, some for saving, some for investment. Over time, even small habits like saving $50 a month can grow into thousands of dollars. In conclusion, let's remember financial literacy isn't just a skill, it's a superpower. It's what helps you to turn dreams into plans and plans into reality. When you understand money, you don't just survive, you thrive. As you all know, the more you will learn, the more you will earn. So keep learning, ask questions, and make smart moves because your future isn't something you wait for, it's something you build. Thank you for investing your time and attention today. The knowledge you gain is a gift that will pay dividends for lifetime. Keep striving, keep learning, and never stop believing in your financial potential.
Thank you so much, Heman. Now, please join me in welcoming Jay and Shambhavi, who will break down the essential features of debit and credit card.
Good evening everyone. Today we're going to discuss about the topic credit and debit card. I Jay will be discussing about the debit card. So ये सुनते ही आपके दिमाग में सबसे पहली चीज क्या आती है? पैसा. Exactly. पैसा, money. या फिर अगर हम अपने रतन सर के एक्सेंट में बोले so it's money. We all have to admit that everybody loves money, but पैसा बहुत कुछ है लेकिन सब कुछ नहीं.
गुड इवनिंग एवरीवन, आई एम शाम्भवी एंड आई नो कि आप सब सोच रहे होंगे कि ये आर्ट्स वाली कहाँ इस कॉमर्स सेमिनार में आ गई, बट आई जस्ट मेड माई वे थ्रू, सो जस्ट बेयर विद मी. एंड टुडे आई विल बी वर्बलाइजिंग अबाउट क्रेडिट कार्ड. बीइंग अ साइकोलॉजी स्टूडेंट, आई लाइक टू टेल यू दैट जब भी आप कैश का यूज़ करते हैं, यू सफ़र थ्रू अ साइकोलॉजिकल प्रेशर कि पैसा ख़त्म हो रहा है. बट वेन एवर यू यूज़ एनी सॉर्ट ऑफ ऑनलाइन ट्रांजैक्शन और एनी card, you don't even realize that money is being spent. Now, can anyone in the crowd tell me what does credit mean? Loan. Yes, that's right, Ganga, it means loan. Credit card is a financial tool that lets you borrow money from the bank, which you later pay it back. And if you don't pay it on time, the bank will charge you interest.
So what is a debit card? A debit card is a direct way to use our money. What these card do is, ये जो आपने अपने खून पसीना एक करके पैसे कमाए होते हैं, ये उनको डायरेक्टली यूज करते हैं. एंड मोर ओवर नो वंस गोना क्वेश्चन यू दैट वेयर डिड ऑल द मनी गो, ऑफ कोर्स एल्स ऑफ योर वाइफ.
Now, जब भी आप क्रेडिट कार्ड का यूज़ करते हैं, यू टेंड टू टेक अ शॉर्ट टर्म लोन फ्रॉम द बैंक. नाउ एज वी नो कि हमारे खुद का पैसा तो है नहीं, हम बैंक से ले रहे हैं. सो बैंक हैज़ सेट सम क्रेडिट लिमिट कि आप एक बारी में इतना पैसा ही विड्रॉ कर सकते हो. बट बिकॉज ऑल ऑफ अस बिलोंग टू अ ब्राउन फैमिली, दूध, घी, बटर, तेल एंड वॉट नॉट हैज़ मेस्ड आवर lifestyle, so we can suffer through any medical emergency. So there is something called medical advantage कि whenever you are suffering through any medical emergency, you can withdraw more amount. Like जो credit limit है उससे ज़्यादा पैसा हम निकाल सकते हैं, then we later pay to the bank.
So how does a debit card work? They do nothing much but use your own money. You can use it by withdrawing it from the ATMs or just swiping the card wherever you want. Moreover, there are no restrictions, just like in credit cards. You are just a free bird with your own money.
Now coming to a little boring part of my presentation, but important. So I'll be talking about numbers in the account number. तो हमारे पास 1 to 17 numbers होते हैं in our account number. So the first digit, if it's 4, then we can use it in India. But the first digit is 5, then it is a MasterCard. We can use it everywhere. Now the digit 1 to 6, it is the identification of the bank or institution that has issued the card. For instance, आपने SBI बैंक से card issue किया है, so every SBI card holder will have the same digit at 1 to 6. Then next we have is 7 to 15, that is our account number which is unique to each holder. Then the last digit is called the check digit. It helps us to detect the error or the invalid card number.
आज के बदलते ज़माने के साथ हमारा डेबिट कार्ड भी थोड़ा सा बदल गया है. सो पहले ये होता था, जो हमारे क्रेडिट कार्ड यूजर्स होते थे सिर्फ उन्हीं को ही हमारा शॉर्ट टर्म लोन मिलता था. बट नाउ व्हाट हैपन इज़, जो हमारा डेबिट कार्ड है, जब हम वी रन आउट ऑफ मनी, दे प्रोवाइड अस अ पर्टिकुलर अमाउंट ऑफ मनी जिससे हम अपना जो लॉस हुआ उसको हम गेन कर सकें वापस से. एंड जब हमारे पास पैसे वापस आएंगे सो बैंक अपने आप उसको डिडक्ट कर देगा हमारे अकाउंट से. सो यू गाइज माइट बी थिंकिंग कि अब डिफरेंसेस की क्या ज़रूरत थी. आई नो मैंने प्रेजेंटेशन बनाई है बट तो मैं इसको समझाऊंगा ही. Credit cards borrow money from your bank, unlike debit cards. In debit cards, we are using our own money. In debit cards, we don't have to repay the money back to the bank, unlike credit cards. But in credit cards, we have to repay the money back, moreover with interest, if not paid on time. Sucks, right? Anyways, moving further. In credit card, we have a credit limit, which was earlier explained by Shambhavi. So I ain't gonna waste my time on it. And in debit cards we don't have any limits. The limit is just your total bank balance. If it's over, you know what's next.
Now in the end, I'd like to say that apply for a credit card only if you are disciplined, or else it will lead to a downfall of your financial status or will lead to a debt trap. तो सावधान रहे, सतर्क रहे. धन्यवाद.
Refer to our previous video on how credit cards work. The main difference between credit cards and debit cards is that credit cards use borrowed money, while debit cards use your own money. If Daryl spends $100 using a credit card, he's effectively borrowing that $100 from the bank with a promise of paying it back at the end of the month. If Daryl spends $100 on a debit card, he uses his own money from his own bank account. One benefit of using a credit card is that Daryl can wait to pay for something until later, when the credit statement is posted. Another benefit is that credit cards often have cash rewards or cash back, where you are given back a small percentage of what you spend. Perhaps the most underappreciated benefit of using a credit card is the ability to dispute payments. If you have a credit card stolen or make an accidental payment, getting your money back is much easier since it's the bank's money, not yours directly. The biggest downside of a credit card is the ability to overspend and get burdened with debt. Many people abuse credit cards and spend more money than they can pay back. Avoid this by making smart choices and paying off the balance every month. The main benefit of debit cards is that they're simpler. There's no borrowing money, paying it back, or worrying about missing a payment. You just use your own money. Another benefit is that it is harder to get into excessive debt with a debit card, since the card will just decline if you don't have enough money. The biggest downside of using a debit card is the lack of consumer protection against fraud.
Thank you for your clear and insightful overview. Now, when you hear insurance, what comes to your mind? Safety, savings, or stress? Today we are going to unpack what insurance really means. Let's welcome Harshit and Akanksha.
Good evening everyone, I am Akanksha.
Hi Arshit.
We are delighted to welcome you to today's seminar, Understanding Insurance, Protecting What Matters. Let me start with a question. If something unexpected happened today, like a car accident, a medical emergency, or a property damage, will you be financially ready? That's exactly what we'll explore together. Insurance isn't just paperwork, it's peace of mind. Let's get started.
What is insurance? Insurance is a contract where you pay a premium and in a return, the company promises to cover the financial losses. Example, you pay 1,000 per month in health insurance. If you get hospitalized, they may cover 1 lakh in expenses.
How insurance works? मतलब इंश्योरेंस पूलिंग की शिद्दत पर काम करती है। कई लोग अपने प्रीमियम्स को एक साथ जमा करते हैं। जब किसी इंश्योर्ड व्यक्ति को नुकसान होता है तो उस पूल फंड से उसका मूल्य भरपाई की जाती है। इसके 3 मेन प्रिंसिपल्स होते हैं। पहला, रिस्क ट्रांसफर। ये एक ऐसा प्रोसेस है जिसमें कोई व्यक्ति अपने किसी खास रिस्क को किसी दूसरे व्यक्ति को ट्रांसफर कर देता है। अगर इंग्लिश में बोले तो यू शिफ्ट द फाइनेंशियल रिस्क टू द इंश्योरर। सेकेंड, प्रीमियम पेमेंट्स, वो रकम जो आप इंश्योरेंस कंपनी को अपनी पॉलिसी को वैलिड रखने के लिए देते हैं। तीसरा, क्लेम प्रोसेसेस। इंश्योरेंस क्लेम प्रोसेस को समझना ज़रूरी है, चाहे आप हेल्थ के लिए समझें या मोटे इंश्योरेंस के लिए क्लेम कर रहे हो। ये प्रोसेस आपको आपके हक को हासिल करने में मदद करती है।
Types of insurance. There are 4 types of insurance. So first is health, which covers hospitalization, treatment and medication. Secondly is auto, in which accident, vehicle damage, liabilities are covered. Third is homeowners. Security of fire, theft, property damage comes in this. And now comes the fourth and one of the most important, life insurance, which provide financial support for the family.
Life insurance in detail. There are 2 types of life insurance, term life and whole life. Term life, coverage for a fixed period. Example, अगर आप 20 साल के लिए टर्म लाइफ इंश्योरेंस लेते हैं और आप इस दौरान मर जाते हैं तो आपकी नॉमिनी को इंश्योरेंस मिल जाती है। लेकिन अगर आप 20 साल के बाद भी जिंदा रहते हैं तो आपकी पॉलिसी समाप्त हो जाती है बिना किसी पे आउट के। होल लाइफ, लाइफ लॉन्ग कवरेज विद इन्वेस्टमेंट वैल्यू, हायर प्रीमियर्स, बिल कैश ओवर टाइम। अगर हिंदी में समझे तो ये एक ऐसी लाइफ इंश्योरेंस है जो आपको पूरी ज़िंदगी के लिए सुरक्षा प्रदान करती है जब तक आप प्रीमियम्स टाइम पर देते रहते हैं। इट इज़ बेस्ड ऑन योर फैमिलीज नीड्स, डेब्ट्स एंड फ्यूचर प्लान्स।
How to choose the right insurance? It includes 3 steps to choose the right insurance. Number 1, assess needs. What risk do you face? Number 2, compare quotes. Use websites, agents, check reviews. Number 3, read terms. Understand what included, excluded, and claim rules. Common mistake: people skip the fine print and face denial claims.
Insurance equals to peace of mind. Don't see insurance as just a cost. It's a protection plan. Your policies should grow with you. Update them when your life changes. Knowing you're protected is like mental relief during tough times.
Recap. Insurance helps you to manage risk. There are 4 types of insurance: health, auto, home and life. Choose what fits your needs and budget. Review your insurance yearly.
Thank you all so much for your time and attention today. I hope you now see insurance not as a burden but as a smart, strategic choice for your peace of mind and future security. If you haven't reviewed your insurance recently, now is the perfect time. For better understanding, we have a video for you. Take care, stay insured and stay protected.
Imagine needing medical care but you can't afford to pay for it. This is where insurance plays a crucial role. It provides financial protection against such risks and ensures you have access to the necessary medical services, so you can focus on getting better without worrying about the cost. By paying a regular premium, which is the amount you pay for your policy, you transfer the risk to the insurer, who covers your medical expenses when unexpected events occur. Let's break down how insurance works. First, insurers use years of experience and data to assess the likelihood of risks, a process known as underwriting. At the same time, they also rely on risk pooling, which involves collecting premiums from many people to build a fund to keep healthcare affordable. What is risk pooling? Imagine a pool with 100 people, each facing the risk of unexpected medical costs. Individually, these costs can be overwhelming. But when each person contributes a small amount to a common pool, the fund can cover the medical costs when someone in the pool needs it. This way, no single individual bears the full financial burden, making healthcare more affordable for everyone. The amount that people pay into the pool depends on the average healthcare costs of all the people in the pool. If more people make claims, that are higher in amount due to rising healthcare costs caused by medical inflation and more incidents of deteriorating health conditions, it can cause funds to run low in the pool. In such cases, each individual may need to top up some money to ensure the pool's long-term sustainability. In the industry, this is called medical repricing or medical revision. To ensure sustainability, we assess each policy thoroughly and ensure all claims are processed diligently and efficiently. Remember, illnesses are unexpected, and having insurance means you're prepared for any eventuality. If you have any concerns about your policies, you can reach out to our Prudential Wealth Planner for a policy review. They can advise you on optimizing your coverage and ensuring it meets your needs.
Thank you so much, Harshit and Akanksha. A banker is a fellow who lends you his money. To make you understand this statement better, we have Ruth.
Good evening to one and all present here. Today I, Ruth, with the student of class 12 commerce to explain the topic banking. A term we hear almost daily in our life yet often don't realize how deeply it influences our lives. So before explaining the topic, I want to thank Sir Deepak Srivastav and Sir Ratan Dev for giving me this opportunity to speak before you all. So let's begin our topic by introducing you banking. What's banking and why it matters? Banking is the backbone of economy. It refers to the activities carried out by financial institutions that accept depositly from the public safeguard. These funds provide loans and other financial services. Banks help to bridge the gap between who have surplus money and those who need it. Surplus money in its simplest terms means that is left over or extra after it has been needed or used. Even you have money that you need after paying your bills and purchases that are surplus. Banking in its simplest form, in the business of managing money for others, typically involving accepting deposits, making loans, and providing financial services, it's a crucial part of any economy, facilitating transactions and the flow of capital. It plays a critical role in the economy by enabling savings and investments, facilitating business expansion, supporting daily transactions like paying bills or using cards. So did you know banks existed as early as Mesopotamia and Asian Greece, where people stored grains and precious metals? Bank has a long history. Asian temples in Mesopotamia and Greece were among the first to act as banks. Modern banking began in the 17th century with the establishment of the Bank of England in 1694 in India. Banking began with the institution like the Bank of Hindustan 1770 and later the establishment of RBI Reserve Bank of India in 1935 marked a turning point. We have types of banks. Banks can be classified into various categories. Central banks, example RBI, regulate currency and control monetary policy. Commercial banks provide services to the general public and the businesses, example HDFC Bank, ICICI Bank, SBI. Cooperative banks operate on a community level, example Bharat Cooperative, Delhi State Cooperative, and Abhidya. Development banks fund industrial and agricultural development, example IFCI, IDBI. Digital neobanks operate entirely online, Axis Bank, HDFC Bank, Paytm, or Bharat PhonePe. Let's talk about core functions of banks. Accepting deposits, granting loans in advance, credit creation, providing locker facilities, issuing debit card, credit cards, foreign exchange services. पर इस मॉडर्न ज़माने में मॉडर्न बैंकिंग भी ज़रूरी है ना. So as you all know, banking has gone digital. Banking gives us digital services like internet banking, mobile banking, UPI payments, and digital wallets have made transaction fast, secure, and convenient. Newer banks and AI-driven financial services are now leading to the change. Now we talk about importance of the banking in the economy. Promotes saving and investments, facilitate trade and commerce, helps in poverty and reduction through financial inclusion, supports government schemes and economic development. Challenges in the banking, cybersecurity threats, non-performing assets, NPAs, regulatory compliance, competition from fintech companies. The future of banking lies in automation, blockchain, technology, data-driven decision-making and inclusion financial services that reach even the remotest corners of the country. To conclude, the banking is not just about money, it's about economic stability, trust and growth. As technology evolves, so does banking becomes more accessible and powerful. It is essential for us to understand banking as it plays a significant role in shaping our financial well-being and the nation progress. This is all about banking, and thank you everyone.
Today, the banking industry is considered as the backbone of the economy and has a major contribution to its growth. It's also the main driver for currency and financial stability. But how did the story of banking start? The term bank is derived from the old Italian word banca, meaning a bench. It referred to the public benches where money changers used to sit for exchanging coins or bills in the marketplace. But it's the goldsmiths of 17th century London who developed banking in its modern form. The goldsmith, who used to store wealthy clients' gold in their private vaults, soon began to lend this gold to others in exchange of a promissory note and the payment of an interest charge. That was the beginning of banking as we know it today. So, what is the general role of a bank? Depositors, or people with money surplus, place their money at the bank in order to earn a return through the credit interest. Borrowers, or people with a shortage of money on the other hand, are willing to pay interest on the money the bank is lending them in order to accomplish an objective they're seeking. And how do banks make profit? A bank's primary source of revenue comes from the difference between the interest it's paying to depositors and the one it's earning from borrowers. A bank also makes profit from charging fees or commissions for services granted by the bank to its customers and from investments. So, why are banks regulated? Banks collect funds from depositors in the form of small-sized deposits and repackage them into larger-sized loans. Borrowers, on the other hand, might not be able to repay the money they borrowed from the bank. In addition to that, banks sometimes invest deposits in risky assets. All of these reasons explain the major role of central banks in protecting depositors' money by monitoring the adequate level of riskiness the bank is taking. What is the role of central banks? Central banks oversee monetary policy to implement specific goals, such as currency stability, low inflation, and full employment. They determine the interest rates that influence the bank's pricing schemes and the economy's money supply. They issue currency and grant authorization to establish banks. Central banks also impose a threshold for capital requirements and place reserve requirements to ensure liquidity in crisis mode. They shape lending policies through margin requirements and other tools, and they act as a lender of last resort to finance banks that need liquidity. Today, several types of banks exist to answer the different needs of consumers and to give them a choice in the way they manage their money. A retail bank, for example, provides services to individuals. Commercial and corporate banks serve small to mid-sized businesses and large enterprises. Investment banks specialize in large and complex financial transactions. Private banks offer a personalized financial and banking service to high-net-worth individuals. So, what do we know today about the future of banking? Direct channels such as mobile and the internet are becoming increasingly important in retail banking as they are in our everyday life. Customers today expect financial firms to listen, respond, and offer services through social media. Customers across all segments expect highly personalized, convenient, and reliable service, along with 24/7 accessibility. Banking is no longer somewhere you go, but something you do.
Thank you so much. Now to draw your attention to an important topic, we have Sanya and Danish Thakur, who will be providing us knowledge about fixed and recurring deposits.
Good evening everyone. Today I, Sanya,
And I, Danish.
will be explaining two common and important saving options offered by bank. First, FD. FD stands for fixed deposit and RD. RD stands for recurring deposit. Now, let's us understand how they work, their features, their benefits, and which one may be right for you. So I'll be telling you about FD, a fixed deposit, understanding a fixed deposit. What does FD means? FD means putting a big amount at once at the bank. यानी एक ऐसा इन्वेस्टमेंट ऑप्शन जिसमें आप एक लम सम अमाउंट एक फिक्स पीरियड के लिए बैंक में डिपॉजिट कर सकते हैं. नाउ लेट्स कम टू द की फीचर्स ऑफ एफडी. वी हैव फिक्स्ड इंटरेस्ट रेट. सो एफडी पर जो इंटरेस्ट मिलता है वो फिक्स होता है, मतलब मार्केट ऊपर या नीचे हो आपका इंटरेस्ट फिक्स रहेगा. देयर विल बी नो चेंज इन इंटरेस्ट. देन वी हैव अ टेन्योर ऑप्शंस. इन दिस यू चूज टू कीप योर मनी फॉर 7 to 10 years. This is suitable for short term या long term goals. Then we have a premature withdrawal. ज़रूरत पड़ने पर आप एफडी को तोड़ सकते हैं मैच्योर पीरियड से पहले, बट दिस चार्जेस यू सम पेनल्टीज. नाउ फोर्थ वी हैव लोन फैसिलिटीज. आप एफडी के अगेंस्ट लोन भी ले सकते हैं. इफ़ यू वांट मनी इन emergency you can take out the money. Now we have a benefits of fixed deposit. First, guaranteed return. FD gives you a stable and fixed interest जिसपे आपका पैसा खुद ब खुद बढ़ता है. Now most important is safety. FD एक low risk investment option है. It means your money is safe. Now we have third, tax benefit. कुछ स्पेशल FD में आपको इनकम टैक्स में डिडक्शन मिलती है. Now Danish will explain you recurring deposit.
सो रिकरिंग डिपॉजिट क्या होता है? आरडी एक ऐसी स्कीम है जिसमें आप हर महीने एक फिक्स्ड अमाउंट बैंक में डिपॉजिट करते हैं एक फिक्स पीरियड तक. फर्स्ट वी हैव फिक्स्ड मंथली इन्वेस्टमेंट. आरडी में हर महीने एक फिक्स्ड अमाउंट डिपॉजिट करना पड़ता है. नेक्स्ट वी हैव टेन्योर ऑप्शन. आरडी का पीरियड 6 महीने से लेकर 10 साल तक का होता है. नाउ इंटरेस्ट रेट, जब आप आरडी खोलते हो तब ही इंटरेस्ट रेट फिक्स कर दिया जाता है. नंबर 4, नॉमिनेशन फैसिलिटी. आप किसी को नॉमिनी बना सकते हो ताकि अगर कुछ मिस हैपनिंग हो जाए तो आप पैसा उन तक आसानी से पहुंचा सको. नाउ विल डिस्कस अबाउट बेनिफिट्स ऑफ रिकरिंग डिपॉजिट. नंबर 1, डिसिप्लिन सेविंग. आरडी रेगुलर इन्वेस्टमेंट की आदत डालता है. नाउ नंबर 3, अफोर्डेबिलिटी. आप छोटे से अमाउंट से भी स्टार्ट कर सकते हो, फॉर एग्जाम्पल 500 to 1000 रुपीज़ पर मंथ. नंबर 3, कंपाउंड आरडी में आपको कंपाउंड इंटरेस्ट मिलता है. नाउ वी डिस्कस एफडी वर्सेस आरडी. एफडी एंड आरडी आर बोथ पॉपुलर लो रिस्क इन्वेस्टमेंट ऑप्शंस ऑफर्ड बाय बैंक्स एंड फाइनेंशियल इंस्टीट्यूशंस. नाउ कम टू द की फीचर्स ऑफ देम. इन्वेस्टमेंट अमाउंट. A lump sum amount is invested at once. So basically lump sum is a single payment made at the particular time. RD once investment is made in regular monthly installment. It is for someone who want to build a saving habit. Number 2, liquidity. FD offers high liquidity and also provides a loan facility against the deposit. RD is less compared to FDs. Premature withdrawal of RD usually attracts a penalty. Number 3, suitability. FD best suited for people with large saving. RDs are ideal for those with a regular income.
Last, conclusion making a right choice. As we wrap up the discussion on fixed deposit and recurring deposit, it's important to understand how to make the right investment decision. So first we have lines with the goals. Fixed deposit is better for lump sum savings, and RD suits those who want to save regular over time. Second, we have consider risk. Although both are safe, but this helps avoid penalties or liquidity issues. Then we have a seek guidelines. If you are not sure about financial or expenses, you can take a guideline from a guidance. So now we have, they can help you to assess your income and expenses. Thank you all for your attention. I hope this will be helpful for you. The best time to start saving was yesterday. The second time is today. Thank you.
मुझे रिटायरमेंट
In India, fixed deposits or FDs and recurring deposits or RDs are still the popular ways to invest money. They are safe, offer decent returns, and are easy to open and liquidate. In an FD, standard terms and are easy to open and liquidate. In an FD, an amount is deposited for a fixed period of time and you get interest on that. While in an RD, a fixed amount is deposited in small intervals over a period of time. Let us delve into the details and find out what an FD is and why it is still relevant. Considered one of the safest investment options, fixed deposit offers relatively high interest in comparison to a regular savings account. The interest is accumulated on the deposited amount over a fixed period of time, and the interest rate varies depending on the type of lender. Senior citizens are usually offered higher rates of interest. In case of an emergency, you can easily liquidate your FD and get the funds. The tenures in fixed deposit schemes are flexible. Investors can choose the tenure according to their convenience. Once the amount has been deposited at a specific interest rate, it remains unaffected by the further changes in interest rates or market fluctuations. Thus, the returns on your deposit are assured. One should always compare the interest rates before opening an FD account. Public sector banks, private banks, and some other small finance banks have different rates of interest. There are several other benefits too, such as loans against FD. One can avail loans of up to 90% of your deposit amount at very low interest rates. FD also provides the option for regular income. One can get the interest sum credited according to the requirements on a monthly, quarterly, or annual basis. Now, let us see how different the RD is. An RD is a saving avenue that works like the systematic investment plan of a mutual fund. Here, a particular amount of money is deducted from your account every month and credited to your recurring deposit. You have to apply for a recurring deposit account and ask the bank to deduct a stipulated amount from your savings or current account every month. The investment tenure ranges from minimum of 6 months to a maximum of 12 months. You can either have an individual account or apply jointly with any family member, even a minor. How is the interest calculated? Interest on recurring deposits is a little lower than that on fixed deposit. Also, you can pay more than one installment at a time but will not get any interest on the additional amount. Is premature withdrawal allowed? You can withdraw prematurely, but the interest paid will be lower than the base rate for deposit tenure or that for the tenure the deposit has been with the bank. Some banks may subject a deposit to a penal interest of 1 to 2%. A recurring deposit account has a lock-in period of 1 month. Premature closure in less than a month will not earn any interest. Only the principal amount will be returned. What happens in the case of a default? If you missed 4 to 6 installments, the bank can discontinue your account. You can revive the account by paying the outstanding money within 1 month from the last default. The interest applicable will be in accordance with the bank's premature withdrawal policy. You can also take a loan or an overdraft up to 90% of the balance against the recurring deposit. During an emergency, this may be a better option than withdrawing your savings as the deposit keep earning interest and you get a loan at a rate lower than the personal loan. When should you apply? It is a good saving avenue for creating an emergency kitty or liquidity for a near-term goal. Those starting off their careers or with low incomes can use this as an option.
Thank you, Sanya and Danish. Everybody, please wake up. Please wake up. Financial literacy is not just important for us. It's important for every one of you. तुम्हें एक better, secure future मिलेगा अगर तुम अभी सुनोगे. We have prepared it from last 1 month. So let me ask you a quick question. How many of you here are aware about investing, budgeting, banking, mutual funds, equity, share bonds? No one, right? इसीलिए सेमिनार है. Please सो मत, सुन लो.
Up next we have Arshita and Shivasini Bhardwaj, who will discuss an initial financial principle of tax. Let's welcome them. Clapping, guys.